And we're back. Another video on this same strategy because I keep getting comments about Ricks. So this is a reverse iron condor or a reverse iron butterfly. And these dates are from a video, a link in the description, which we put out around the holidays last year, which went kind of viral and a lot of people started talking about them. A lot of people automate Ricks on the Optional Mega platform. A lot of people talk about backtest for Ricks in the Optional Mega Discord. And what has happened is, if we look at this backtest year to date, it has not been great. And people might say, Matt, why are all your videos about Ricks? Well, we put out a YouTube video every day. You may not actually know this, but we literally have a YouTube video every market day of the week. If you look in the box below, I'll put a link to it. It's the OO show. We have a backtest just about every day for you to peruse. So in reality, Ricks are barely any of our content. But here's what's interesting. Since this backtest came out, we have a new option in the backtester that hasn't gotten a ton of attention, although it was highly requested and a few people are using it. It is intraday VIX movement. And so I just have this thesis that because of how the market is in 2025, these Ricks that enter first thing in the morning, they may not be the best backtest in 2025. And so we're just going to play around and iterate all of this. And what you can do is you can use a floating time entry in Optional Mega. And I think that might be an interesting choice. So what we're going to do is we're going to use that floating time entry. And let's just do big round numbers because I'm a fan of not overfitting. And I'm sure if we come up with a decent backtest, it will be easy to find a more optimized time. But we're just going to go 10:30. We'll stick with 10:30 to 12:30. So just giant round numbers. Okay. And what we're going to do is put a minimum VIX intraday move down. What is the thesis behind this? Because a lot of backtesting is you have a thesis, you have an idea, and you want to test it. Well, the thesis behind this, and there we go, we're already getting a little somewhere. The thesis behind this is simply that we want to enter at a little bit of a discount. And so if we look at these backtests, a lot of them are at 10:30. There's a decent chunk that are at 10:30. But if you look at the trade log, a lot of them enter later. So what are we doing? We're buying this when VIX is going down, right? VIX is having an intraday movement. Now, in this case, the spread is about 30 wide. So since we're at the money, this version is going to be a long straddle, right? So we're at 62.30. We're buying a 62.30 put and a 62.30 call. We're at 61.23. We're buying a 25 put and a 25 call. You can have some big losers. Here's a loser that probably lost everything. But now this is a small sample size. So in a small sample size, wins about 6 out of 10 times. What we can actually do, let's run this back to dailies and we'll see how these numbers compare. So we're at a 60% win rate. I think we're about a 5% capture rate. And let's just run this back since dailies. So that's going back over 3 years now. And what's interesting is actually this year hasn't been great for it, but it's worked over the long term. So that is a little bit interesting. It still wins 60%. Now your winners are smaller than your losers. Okay. So maybe we can test a thesis about that as well. I'm just going to go back to this version with just this year. We'll test it just this year. And if it can survive this year's, then we'll test it on a longer term. So my thesis in thinking about this is if you are entering a market where VIX is moving down, and one thing we can do to get even more sample size, let's remove this VIX overnight down move. Let's look at our metrics first. So we'll say 5% capture rate, 60.9 win rate. And we've got how many trades in the backtest? Just 46. So let's see if we can make this a little more robust, and we'll move this. So we're removing a little bit of the fitting. I'm removing a little bit of the curve fitting. Okay. So we do get a lot more trades. It's kind of decimated the capture rate. As a result, the MAR rate as well. Win rate is about the same. So let's go back to the version that had both for this year. Here we go. Okay. We'll keep that. We may come back to that. So here's my thesis. If the VIX is contracting, the market is like grinding up or staying stable or pumping something and the VIX is going down, most of the time we're probably going to finish higher. And so having the calls at the money, that makes sense, right? A lot of the orb trades, kind of the same philosophy. And I'm kind of taking some lessons from a lot of orb backtests and trading many orbs over the years and automating them and all that. I like having the calls at the money, the call debit spread. I wonder if we make the puts a little bit out of the money, because that's not going to win most of the time. And so if we make the puts, let's just do big round numbers. So we'll keep the puts 0.5% wide, but let's move them down. So instead of buying an at the money, it's going to be an at the money call debit spread. Okay, there we go. An out of the money put debit spread. And our capture rate went up quite a bit, which is super interesting. Now, again, this is a very small sample size. This is not statistically significant, I would say, 46 trades. But I think we had exactly the same number of winners. And our capture rate's pretty good. 11.1% is pretty good. And so if you look at it, the average winner is still smaller than the average loser, but we're winning most of the time, and that's why the numbers work. Let's just take this a little bit farther. And this is probably, I think we could actually probably just run this back test with just calls in this market. There we go, even higher. Yeah. Okay, so there were some winners to the put side because our win rate dropped. But look what happened. The win rate dropped, but now we're winning more than we're losing. Our capture rate, 18%. I mean, that's pretty healthy. Let's do this. Let's run, and here we'll look at some strikes to get an idea. So the puts are still 30 wide, but what happens is you got to have a big move down for them to hit. So in this case, went to the calls. In this case, went to the calls. In this case, it went to the calls. Anybody noticing a trend here? In this case, it went to the puts, but just barely. So this is one of those indications where on June 18th, it would have been better if we were closer to the money on the puts. You can see the action right there. So let's run this back since dailies, see how it does. And again, we're floating the entry based on a VIX intraday move down. So running this back to 2022 dailies should give us a lot more data points. You know, it's starting to kind of get interesting here. So let's check it out. So we've got a 20% capture rate. Again, I say this every time. It's important. It bears repeating. Your CAGR and your drawdown are what create your MAR. The MAR is just the math of these. And the portfolio allocation is going to change all three of these numbers. I'm keeping it the same thing we've had in that back test that I started with, just to match like for like. So I'm looking at things like our win percentage and our capture rate. So a 20% capture rate is like it's not that bad. One thing that would be interesting is let's just get rid of the puts entirely and see how it does as just a call debit spread. I don't know how it's going to do. I have not back tested this, not even a little bit. But again, we've got a sample size of a couple hundred now over a few years. So it's at least getting interesting. We are finding some interesting things. Okay. So I think the win rate went down. I think the MAR went down too. It sure did. So the win rate went down. The capture rate went up a little bit. The drawdown went up a lot. So yeah, this is kind of an interesting concept. And again, I bet let's just play with the percentages. If we do 0.25 and 0.75, there's a bunch of different ways to back this obviously. And again, this is a concept. I stated a thesis. We're testing on it. And so this is kind of what I like to see. A pretty similar capture rate. Win rate went up a little bit. Capture rate went down a little bit. The MAR, I think, is identical. Is that right? Maybe identical. Maybe it's in the same neighborhood. So there's a lot of different ways that you could do this. Let's try it. Let's go back to buying a put and have unlimited downside gains. So we're gonna take the short put away and just have a long put. My guess is this is going to catch maybe a couple of really big winners, but maybe not. Yeah, it did. Just laughing. I mean, this would have been a Domino's night. You would have celebrated with Domino's and you would have gotten extra steak on the pizza, right? So at some point, what you did there was you caught a market that didn't expect a big move and then got a big move. So if you sort these by winners, you can kind of see where they are. Here, we'll sort for max profit. Yeah. Oh man, that was not that long ago. Wow. Was that Liberation Day? I think this is maybe Liberation Day or like around Liberation Day. And that might not even, was that the biggest winner? I think that probably was. Let's look. Yeah. Woof. Here's the thing. That would have been spicy to enter. Expensive. Here's another one. This day I actually remember because I know it was a Fed day. So what's interesting is like you had a Fed day here when the market just absolutely didn't think what was going to happen was going to happen. And if you look at the VIX, let's just look at the VIX by itself. If you look at the VIX by itself on that day, you can see we've got a timeline here and you can see, look, when did it pop? 201. Here's the timeline on these days. There's usually a news drop at 2 and then they usually start talking at 2:30. I particularly remember this day where I was because I was actually in a meeting. We were watching the market and then it just whoop, the VIX went that way. We'll pull up the underlying. You can see what the underlying did. Boom, went the opposite way. And then let's look at the trade. You can see, super interesting. Why did our trade go with the VIX? Well, because we had a long put. So this is really interesting. Let's see we've got a couple different versions. I mean, they're all interesting. I will save this one with the 0.25. I don't think this is even the best one, right? And these are just like, I don't want to say they're dumb times. They're just big round numbers. So if you want to play around with these in the backtester, I'll drop a link below. And again, check out that VIX intraday move. Kind of exciting. Thanks, guys. As always, like and subscribe the video and check us out on the DOO show. It's market days, 8:45 till right before the bell. When you're finishing your morning coffee, before driving to work, taking a walk, dropping the kids off, whatever you're doing, check us out and we chop it up. So we will see you out there. Thank you so much.